Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And of course, joining me today is Michael Becker.
Hey, Paul.
Also with Old Capital. So today in the podcast, we have a well-respected mentor. He is an advisor to people that want to learn how to get into the multifamily business. I've known Brad Sumrok for probably about, I'd say almost 10 years, maybe a little bit less than 10 years. And he is a senior mentor in the apartment ownership business. And so he's the guy you would go to learn apartment ownership. And I want to kind of bring in Michael. And Michael, I'm going to let you kick it off a little bit here.
Hey, Brad, how are you doing today?
I'm doing good. It's good to be here.
Yeah. You guys might remember Brad. We had Brad back, over a year ago, I think on episode number 8. So a while ago. So we're having him back on the podcast for the second time now. I thought we maybe kind of talk a couple different segments, a couple different topics here, maybe kind of on building your team, and then how do you find deals? How do you get your first deal done? So maybe we kind of start with the team, Brad. We always kind of discuss internally that real estate is kind of like a team sport. You have team members on it. Maybe you can kind of, from your perspective, talk about the team and what it takes to build a team and who needs to be on your team to be successful in raising money and buying apartment complexes.
Sure, I'll be glad to. And I just want to say that, when I started, I was educated with a college degree, a master's degree. And like so many other people that have a formal education, we tend to think we could do things on our own, and that's how a lot of us are raised is, don't depend on other people and you want to do things yourself. And that will serve you well to a certain point. But when you're getting into multifamily investing, you really want to leverage an experienced team. And it was hard for someone like me when I got started in this business 14 years ago to learn that because, we work hard, we study hard, we're intelligent people. But what you don't have is you don't have that proven track record in multifamily. And so, you want to leverage the experience of other people to help you get into that business. And that was one of my learning points that I had to go through 14 years ago was how do I get into that multifamily business successfully? How am I taken seriously? How do I find these deals? How do I get brokers to send me their deals when all I have in my resume is an engineering degree and an MBA with no multifamily experience?
So how did you overcome that? What was one of the first steps you took to kind of start building out your team?
Well, there's a whole, if you think of a team like baseball or football, you're not out there on your own or basketball, hockey. So, one of the things that I like to do is I like to leverage experienced people in the industry to help me. And I do that today, by the way, even though I've been doing it for 14 years. So I'll name the members of some of these people that you want to have on your team or their roles. And this is not in any particular order, but one is you want to get to know the brokers and the market. So, I tell my students, pick a few markets where you're going to invest, and we could talk about what makes a good market. So after you identify your market, you want to start reaching out to brokers. And what I see is in any market, there's about 10% of the brokers in that market that cover like 90% of the deals.
Sure.
So you want to get to know who those brokers are, and you want to build relationships with those brokers. You want to work with experienced mortgage brokers, okay? And that's obviously, Old Capital comes into play. You guys do loans, not just in DFW, not just in Texas. You do loans all over the country. But if somebody is new to multifamily or they're new to that market, attaching credibility with you where your team has financed loans in that market is really going to help somebody. Same with like property management companies. And I teach people all over the country how to do apartment investing. So I say, hey, look, if you're new to apartment investing, you get a relationship with a management company that's already in that market, that has an established presence, that has credibility. And if they're going to possibly manage your property, do your due diligence, now you can say, hey, this is the company doing our loan. This is the company managing our property. You're going to have a lot more credibility getting into that market and getting credibility with brokers.
So if I'm new into a market, I'm new into multifamily, how do I find, where would you start? What would be one of the first people that you kind of get on your team? And then how do you then expand your team from that first member on to the other people?
Well, not to be self-serving too, but there's a lot of, I had a mentor when I started, and I offer similar mentoring services, and working with a mentor, whether it's me or somebody else, we could really help shorten that whole learning curve. And so what I do with my students is I give them access to people on my team. So they don't have to go out and reinvent the wheel. I give them a whole Rolodex of management companies, brokers, lenders, attorneys, contractors. You don't want to be looking in the yellow pages for these service providers, insurance companies. You want to work with proven people that have a track record. And so I provide that to people that come to my training events. But, a lot of people say things like, oh, there's no good deals on LoopNet. And to some extent, that's true. But if you're brand new starting and they're listening to this podcast and, they've never been to a training event, they've never done a deal, they don't know anybody in the industry, a good place to just start looking is you can get on LoopNet, you could get on there for free, and you could start reaching out to brokers. And then then you could start building relationships with brokers. You could ask brokers in those markets, who are the management companies, who are some contractors that you've worked with before. Always do your own due diligence and verify the information they're giving you. But that's a simple way where you can start getting that information. If you're new and you don't have anywhere else to go, that's when I started. I found I built a lot of relationships with brokers and people that I met on LoopNet.
It's really transfer of legitimacy, transfer of competence, that once people understand that you're part of, say, Brad's group, or you're part of a mentor's group, that transfer gets pushed over to you. So even if you don't have a lot of experience, just being part of a group, say Brad's group, brings a lot of credibility, transfer of credibility to you.
So maybe you can expound upon a little bit. What are some of either the common mistakes, or what are some of the successful traits when you're trying to form a new relationship with a broker or a management company? What are some of the things that you see people either good or bad do when they're trying to form a relationship on the front end? Is there any kind of common themes, good and bad?
Well, you want to tell the truth. Okay, so if you're new, you don't lie and say, hey, we buy apartments, we close quickly, we have cash. That's what some of these gurus teach, where it's no job, no money, no credit, no problem. And that's not my strategy. It's never been my strategy. And so you want to tell the truth. You want to build a resume. And so you want to build a real estate resume, a professional resume. So this could be different than your professional resume that you may have in your job. Okay. But look, if you have a degree, if you have multiple degrees, if you have a high-paying job, if you manage a team of people, you want to look at what transferable skill sets you have in your job so you can leverage that to your real estate resume. And, a lot of people going into multifamily may have done some other type of real estate investing. So even if you've done single-family rentals or wholesaling or notes, anything related to real estate, you should put on your resume. And then again, if you're new in multifamily, sometimes you might want to partner with people in multifamily. A lot of my students, they might start as a passive investor with somebody else, or maybe they will be a co-sponsor or a co-lead sponsor in a deal with somebody else, or maybe a KP, which is, being a loan guarantor with somebody else. So there's a lot of ways where you can start building your resume. And then depending on their own net worth and their own liquidity, they may be strong enough to sponsor a deal on their own out of the gate. But so you really want to have a resume. And in that resume, you want to be able to also identify who's on your team. If I were coaching somebody, I would say, hey, who's your lender? Who's your attorney? Who is your management company? And so they could look at your team members and say, oh, okay, well, wow, this guy is new or this gal is new, but they're working with a group of experienced people. And that's how you really want to increase your chances of winning the deal, and also, build credibility with brokers that are going to send you deals.
How long do you think it takes from the period of time that a person starts this to the period of time that they can actually buy a property? Is it something that can happen as fast as you want it to happen, or does it happen slow? What is the time frame for, say, a typical person that gets into your program or gets into a program?
Well, I would say it's perfectly reasonable to if you came in as one of my coaching students to sponsor, to lead a syndication and have a deal led and closed within 12 months, I think is entirely realistic. When I started in this business, I went from having zero real estate experience. I had never much as owned a single family rental. And I owned my first apartment building 8 months after I took my first training event. And I have a lot of students that have replicated that. Now, some have gone faster, some have gone slower. And I think one of the biggest mistakes is obviously getting frustrated and giving up. Some people have what I call the silver penny syndrome. They come to a multifamily training event, they get all excited about multifamily. They look at 3 deals, they make 3 offers in 3 months, none of them are accepted. And then they go to the hotel investment training class or the note buying investment training class. And then they're out there doing something else. And, to me, a lot of people ask me, Brad, what's the secret? Well, the secret is I've been doing it for 14 years and it's my area of specialty. I'm not a jack of all trades. I'm a multifamily specialist. I buy deals myself. And I coach and mentor people that want to buy apartment deals. So, I got good in one asset class, and I think that the power of focus has served me well over the years.
So we've talked about your team now. So one of the things that we commonly hear, Paul and I do, that it's impossible to find a deal anymore. All the good deals are gone. It's a really competitive market, and to a certain extent, I believe it is a very competitive market in most of the places around the country, and specifically here in DFW. But a lot of deals are getting done right now, so maybe we kind of transition over. How do you find a deal, basically? So what are some of the things? Now we have a team, we got our brokers on it. What are some of the things that you need to do, sources on how to find the deal? And if you're a first timer, how do you get your first deal done? Because your first deal is obviously the most challenging, the hardest one to get done. So maybe talk a little bit about where do you go when you're looking at finding a deal? Where do you coach your students when they're looking to find their first deal?
Well, there was a lot in that question. So I have if
you break it down however you want.
Make sure you keep me on track here because I could talk a long time about that question. So help me out here. But you said a lot. And one of them, you got to have this mindset where you got to believe that you're going to find a deal. And I don't mean to sound, pie in the sky or The Secret where you just close your eyes and manifest the deal coming. That's not what I'm talking about. The thing is that I've been in this business since 2002, and I've always had students or customers that have complained that there aren't any deals. And also, I've always had students buying deals. And so how could it be that some people were buying deals and other people were saying that there aren't any deals? And that's true today. Okay, so right now, prior to us getting on the air, I got 9 deals under contract with 9 different students in various markets. Some are in DFW, some are in Texas, and some are out of Texas. And so there's 9 people that I'm personally coaching that are buying deals. And, last year in 2015, I helped people buy 25 apartment complexes all over the country. Many of those were in DFW and in Texas, and several were not. And so, I think a lot of people give up too easily. Okay. Now, I also do agree that the market is tighter, and right now, multifamily is kind of the hot segment where you have people that aren't traditionally multifamily investors that are chasing multifamily deals. And the truth is some of those people will be gone in a year or two. They'll be going after the next hot segment. So you don't want to get in when the market is hot. You want to get in because you've decided that multifamily investing is right for you. That it's the right business for you, that you want to be a business owner, you want to be an investor, you want to get the returns from multifamily. You shouldn't just get into it because it's the hot segment. Now, that being said, the next thing I would say is what makes a good return. I used to look at deals and want to double my money in 3 years. And then I said, well, if I double my money in 5 years, it's still a pretty darn good deal. And now I'm looking at some of these deals saying, hey, if I double my money in 6 or 7 years, it's still a pretty darn good deal. So look, I still look to get double-digit average annualized returns. But if I can get a 15 or 16% IRR or say an 80% total return over 5 years, I still think that's pretty good. I mean, where else are you getting that kind of money?
It's a world of bad options right now, right? And everything's relative compared to stock market and treasury bonds. These multifamily returns it's all relative, right? And I think that's your point.
Yeah, and if someone's out there listening and they're not getting double-digit average annualized returns, I mean, I know some multifamily syndicators outside of my group. They offer their passive investors 6 to 7% returns. And if you can get an 80% total return over 5 years, which is like a 16% IRR, that's pretty good.
Yeah, definitely. So we have the mindset, we have the focus on the multifamily asset class, we have a team. So how do you get that elusive first deal? What are some of the steps? What have you noticed on your students that have been successful, and some of the common traits that allow them to go get their first deal done?
Well, and again, I could just share with you my own experience. I invested in my own education before I went out looking for deals. And I was just talking to a student today, and he's looking at a deal in North Carolina. And he said, Brad, before I took your training, I couldn't even talk the talk with these brokers, and I was intimidated to get on the phone. And he goes, and now I've taken your training and I'm working with you on these deals, and these brokers, they take me a lot more seriously because I can talk NOI, cap rate, value add, exterior improvements, interior improvements, capital improvements. And he's using the language and he understands what he's talking about. So again, I know you, if you're listening out there and you're intelligent and you're successful in your job like I was, you're thinking, oh, I don't need any, I could do all this on my own. But the truth is that what really helped me and where I help so many people is I level the playing field. I help people level the playing field. So, again, getting your first deal is always the hardest. I think if you invest in your own education, that's going to give you an edge. I think if you partner or have experienced team members, that's going to give you the edge. Sometimes, you may be strong enough financially to lead your own deal. And I mean, look, I have students that come in as accredited investors, and so they could lead their own deal. And I have other students that come in with less liquidity, less net worth, and they may, need to partner up with somebody with more experience on their first deal. And don't try to hit a home run in baseball terms on your first deal. You want to get your deal closed, get on base. It's not about how much money you make on your first deal or how you're compensated. And that's the other thing. I see some of these sponsors, not in my group, but out there nationally, and they're taking acquisition fees and huge percentages of the deal, and they don't even have a track record. So my advice is get your first deal done. Don't worry too much about how much money you're getting paid. Make sure it's a good deal for your investors and let your track record speak for itself.
Yeah, that's great advice. That was one of the things when, I started doing deals on my own. That was exactly my mindset. Just get the first deal done, and it sets up the rest of your career. You can rinse and repeat and then get paid on future deals once you establish a track record. And most importantly, return capital to your investors, because nothing rings more true to an investor than you gave me $1 and I gave you back $2. That helps a lot.
I mean, you'll have investors for life. And like I have some students that on their first deal, they didn't take any extra compensation except their own capital investment. And now they're on deal number 4, deal number 5. They have great track records. They have investors that have been with them for years that have consistently made double-digit returns. And raising money is one of the easiest things for them to do.
So now we have the mindset, we have a team, we've been educated, we're focused on returning capital to investors. How do you effectively work with a broker? What increases your chance on that broker selecting my offer over one of the other 5 or 10 offers that they're presented? How do you kind of crack that code? That's one of the things. A lot of people go out and say, hey, I offered on 20 properties, I didn't get selected on any of them. In this environment here recently, what have you noticed that separated the successful offers from the ones that haven't been accepted?
Well, it is a relationship business. So obviously, again, I'm going back to what I said before, but if you've done a deal with that broker before, that's going to be a big advantage to you. Now, again, what if you haven't done a deal with that broker, or haven't done a deal with any broker? Well, that's why it's so critical to have somebody on your team that you can leverage. And, also just, talking to the broker about, like, before I ever submit an offer, I always ask the broker, what would you like to see in an offer?
Sure.
I ask them.
Very simple, right?
I mean, I don't just send in the offer. you wouldn't, I mean, you would believe it. But I mean, I got students that are like, oh, Brad, just submit the offer. And, the broker's legally obligated to respond to me. And, they talk about all that crap that they read in the book. And it's like, look, if the offer isn't even close to what they're expecting, you're never going to even hear from them.
Right.
They're not going to send you a written counter in writing because that's what you read in the real estate textbook. And so you want to ask them what they expect to see in an offer. Before I send the offer, I always verbally communicate the price that I'm thinking about offering and say, hey, well, what do you think about this price? And then hopefully they're going to give you some feedback on the phone so you could adjust it if you need to, right?
Sure.
And you could talk about the terms, your inspection period, your closing period, your financing period. So I always talk through the offer. Then I ask, well, hey, would it help if I sent you my resume? Would you help if you knew that we saw the property and all of our decision makers have seen the property and our lender has seen the property and the company that's going to manage the property for us has also seen the property? All of that stuff is going to help you be selected. Now, also at the end of the day, all the time, but in this market especially, you do need to have a competitive offer. But I can tell you this, I have not always been the highest price, or my students are not always the highest price, and we still get selected many times because they have certainty that we're going to perform, i.e. they know we're going to close.
Right. So it's about patching your offer in the right way so they can present in the best light to the seller, because they're not in this for the practice. They want certainty of execution. That's very, very true.
Yeah, and the bigger the deal, the more all of this applies. Now, if you're going after like a 10-unit deal with a mom and pop owner, those are the types of deals where, you talk about creative financing and all that type of stuff. But we're not talking about that here. We're talking about 30, 40, 50, 60, 100, 150, 200, 300 unit buildings that not only the three of us here buy, but, students and clients of yours that you finance buy these buildings. And I have students on their first deal that are buying 100, 200, 300 unit buildings. And so it's really important that, you're able to connect these dots.
Give me an example of like one of your students on these 9 transactions. I mean, just pick one deal. Why do you think they got the deal? Why was their offer accepted? Was there a transfer of skills that you had? Had they done it before? Just give me kind of a typical one of these 9 transactions. Give me kind of some background.
Well, here's a great example. So one of my students bought a deal in Oklahoma City, and he has a relationship with that broker. So she's sending him deals. Okay. And then through him, some of my other students expressed the desire to buy in Oklahoma City. And so now that broker is sending deals to other students in my program. And so these 2 students that don't have a track record, they haven't put a deal together before. They got the deal from the broker. They analyzed the deal. They went up there toward the property, did all the things that we said, but they don't have, their own deal history. So they decided to partner with a student that had already bought in Oklahoma City. When I say partner, they're on the co-sponsorship team or the management team. And so now they're all in it together. And that one experienced borrower and experienced owner already has the relationship with the broker, already owns in that city. So you see, if they tried to do it themselves, they may not have gotten the deal because they would have had less certainty that they were going to close. And so these 2 students that were new, they made a very wise decision. They gave up some of their sponsor compensation and split it with the guy that had experience in that market because they know their whole goal is to get this first deal closed and get on first base, so to speak. So they're buying like a 100-unit deal. They have a 3-person, management team, and one of them has experience in that market and with that broker. And I think that was critical for them getting the deal accepted. And you guys are doing the loan. So, I mean, you tell me, wasn't that pretty important for them to work with somebody that already had that borrower experience on their buying group?
Right. We're able to give them a non-recourse loan, and they certainly wouldn't have qualified for that out of the gate if they didn't have someone with experience on the team. And like you mentioned, they wouldn't even been awarded the opportunity in all likelihood without him, because he was the linchpin to the deal.
So imagine you're new and you want to get into a deal, a 100-unit deal, in a market you've never owned in before, and you want to get a non-recourse loan. Well, that's why so many people shy away from multifamily, is because they're like, oh, I can't do that. I don't have the money. I don't have the experience. I'm going to go flip houses or whatever. But the truth is you can do this. You just have to build the right team. And that's a good point, because when we talked about team, we talked about brokers and mentors and, management companies. Well, what about some of your team members being your own investors? Okay. So when you do a syndication, you're buying as a group. It's a group of people that are all pulling their money together in an SEC compliant manner. And some of these team members or investors, as we call them, they're going to be passive investors where they just put their money in the deal. And some of them may be loan guarantors. And if you're new, you want to align yourself with a loan guarantor that already has experience, that's already borrowed money before on a multifamily property. And you may want to align yourself with a co-managing partner that already owns a multifamily building, and that's going to help you so much getting into your first deal.
And raising money from the other
and
passive
raising money
investors,
from the
right?
other passives and having credibility with other investors.
The transfer of credibility is such an important part of being a new baby borrower when you buy an apartment building. If you don't have experience, you got to rely upon somebody else's credibility and certainty of execution to get there. But Brad, you're an educator. And so as an educator, you teach people what to do and what not to do. And so for that, you charge, say, a fee, but that fee, I would think, is a nominal fee versus the cost of something, because you're talking about millions of dollars possibly in these investments. Your fee could just be a nominal fee just to teach somebody versus the mistakes that they could make if they didn't have somebody who was as sharp as a mentor that you are. So talk about some of the mistakes people who don't have mentors make.
There's so many, and it's like, so I am an educator and I'm also an investor. I was an investor for several years and didn't become an educator until I quit my 6-figure corporate job. And I was able to do that because I had replaced my 6-figure corporate job with my 6-figure apartment investing income. So I walk the walk, as you know, and I don't just talk the talk.
And you went to Carnegie Mellon too. So, you're no dummy.
Well, that gave me good formal education, which enabled me to design a really kick-ass, could I say that on the show? A kick-ass spreadsheet, which is really a powerful analysis tool. But it's like, I'm doing a deal right now, it's a $30 million deal. So I could teach people, I share my experiences on that transaction. So now I have students that are able to go out, and instead of them taking 14 years like it took me to do a $30 million deal, I have it took me 12 years until I was able to do a $10 million deal. And now I have students that after like 1 or 2 years are doing $10 to $15 million deals. So they're really shortening the learning curve.
Collapsing timeframes.
Yeah,
right?
Collapsing time frame, shortening the learning curve, leveraging my Rolodex. But mistakes, I see offering packages from other, inexperienced syndicators, lead syndicators, that the underwriting doesn't work. It's too aggressive. The vacancies are too low. The cap rates are out of whack. The sponsor compensations are out of whack. It's too much for them, not enough for the passives. There's all kinds of things people do wrong. They don't use PPMs. They don't know how to raise money legally. When you're raising the money, they don't raise enough money. They're underfunded. They're too optimistic in their projections.
You could keep going on. I've seen all these mistakes for people that come in to see us that don't have experience. And this is a game where the dollars that are at risk are millions of dollars. You kind of have to have somebody guide you through the forest on how it's to be done.
Yeah, that's all good points.
It's literally, it could potentially be hundreds of thousands of dollars of your money, and potentially worse, other people's money that entrusted you that's at stake. And then secondly is, if your first deal doesn't go well, what's the likelihood of you raising money for your second deal? Okay. So again, I think having someone to walk you through the pitfalls and the curveballs and advise you on what to do and what not to do, that's currently doing it, that's done what it is you want to do, and then has a proven track record, is
valuable.
Critical.
Yeah. So maybe we can last topic here is just talk about the current environment. You mentioned that your students have 9 transactions going currently, and you've done about 3,000 units in your career. You still own quite a few of those currently, right? I don't remember how many you
That's
currently
correct.
own. So you see a lot of deals. So those are deals that you're doing, and then you see a lot of deals that you don't do. So maybe you can kind of talk. Most of our listenership, property in Texas and DFW, but we do loans all over the country. But maybe you can kind of talk, nationally, kind of what you feel Texas, and maybe more specifically on some of the stuff you see in DFW. Are there still deals out there? What's going on in the marketplace? What's kind of Brad Sumrok's state of the union for multifamily right now?
Well, I would say proceed with caution. I mean, I think there's still good deals out there, but I think what I offer in terms of education is even more important, because in some cases, and I'm just going to say in some cases, there is stupid money being thrown at some of these deals because the multifamily sector is hot. And so now what you have is, and it's not just now, it's been happening for the past 12 to 24 months, but you got money coming from investors that it could be all over the map. It could be they don't know how to underwrite the deals. They don't know the industry. It could be that they have a lower return threshold than you do. I hear about Chinese money coming in where if they make a 1 or 2% return or just break even and could pass their money down to the next generation, that sounds good to them. I mean, I don't know. Again, I mean, my threshold was always how fast could I double my money? Okay. And again, I think that if I could double my money and if I could make a double-digit cash on cash, average double-digit cash on cash, which is 10% or more over a 5-year holding period. So over 5 years, could I make a 50% return on the cash flow? And then is there also going to be some upside that I could predict with a relative, level of comfort and certainty by using a conservative underwriting model? So I think the deals are still out there. Obviously, we look at more, when I say we, me and my students, we look at a lot more deals and make more offers than we get. So out of these 9 deals that we have under contract, we looked at 90 or 100 and we don't get them all. So I think just being perseverant and not getting frustrated because, you didn't get the deal is critical.
What are some like the nuances, like what you see here recently in the offer process and the return projections, kind of the rental rates? How is it now versus say 12 or 24 months ago?
Well, here's the thing. A lot of people are like, oh my gosh, I can't believe how much this is selling for now. And, again, I've been hearing that for years. And the analogy is like, and I don't know if this is a good one, so don't. But, my dad still thinks that, and my dad's not going to listen to the podcast, and I don't mean to be critical to my dad, but he still thinks that a loaf of bread costs a quarter, and it's never going to be a quarter again. Okay. So the question is that property that was $30,000 a door that we looked at 6 years ago overpriced now that it's $50,000 a door? And some people are going to wait and say, well, I'm going to wait until it's $30,000 a door again. I'm from Pittsburgh. There's still people in Pittsburgh that are waiting for the steel industry to come back to Pittsburgh so they can get a job as a steel worker. And then other people are saying, hey, these jobs are long gone. They're never going to come back. And so my view is that if we can underwrite the deal and buy it where we get that double-digit average annualized return. I just sold a deal 2 years ago for like $34,000 a door, and I see it on the market now for $44,000 a door. So yeah, there is part of me that's saying, holy, bejesus. I mean, is it really worth it? But then when I look at the underwriting, see, here's one thing we have to remember. Rents in DFW and in many markets in the country have gone up 8 to 10% a year. Occupancies are at an all-time high. Rent growth have been going up. I underwrite my deals with like a 2% rent growth, and they've been going up organically without doing any rehab. They've been going up like 8%, 10%, 12%. And then, Mike, as you know, we could find deals where the interiors and the exteriors haven't been upgraded. So some of these deals that we buy, we could bump rents up by like 20%.
Day one.
30%.
Doing appliances and flooring, right? Yeah.
So look, here's the key with multifamily. Income goes up if rents and occupancy go up. And when that happens, the value goes up because the value of these properties is driven by NOI. Okay, so NOIs have been going up through the roof. So it's only natural that the value of these properties is going to be higher. So now the other side is I don't underwrite these deals based on 8 or 10% rent growth. I mean, I'm still using like 2% rent growth, okay? I look at historical cap rates, historical occupancies, historical rent growth, and if the numbers work using historical numbers, then I would buy it, Okay. And where do I get historical numbers? Well, I subscribe to databases like ALN and CoStar, and I leverage that data to my students. So if the data supports the deal, we buy it. And Paul mentioned, I went to Carnegie Mellon, and well, I guess one thing that I got from that engineering and education is I'm a very data-driven person. So I get good data, I spend the money, I access good data, I verify it personally, I put it in my underwriting model. If the numbers work, I would buy it.
And so for all that said, prices are up, but rents are up at the same time, and you're still able to find decent deals out in the marketplace. You just have to be selective, thorough, know how to underwrite these deals, and be conservative with historic assumptions. Is that kind of the nutshell of what Brad Sumrok feels is in the marketplace right now?
I think so. And I see, again, some of the mistakes. I have students that bring me offering packages from non-students, and they say, hey, Brad, what do you think about this deal? And I look at their projections, and some of them, they're very aggressive. And I don't like that. I like to see numbers that have a more historical component to it. Because if the deal works with the historical numbers, you have a better chance of mitigating your risk.
Give me 2 or 3 reasons why people should be buying in Texas, as an example. Why is it the way that we do business in Texas? Because it's jobs come to Texas. I mean, what's the reason why so many people are so crazy about Texas? And is Texas the only place that people should invest in? What's your 2 cents on that?
Well, Texas is a great market. I've been blessed because I've lived in Houston and then Dallas. And so I've always been able to invest in my own backyard. And there's advantages to that. And the advantage of investing in your own backyard is simply familiarity. Okay. But familiarity alone is not the best reason to invest. And there are certain markets where it's just not good to invest. So I kind of have a recipe for what makes a good market. Texas fits that recipe quite well. One is landlord and business friendly environment. Texas happens to lead the country in landlord and business friendliness. There's other markets that are also landlord and business friendly. These are like states like Florida, Colorado, Ohio, Oklahoma. By the way, I own multifamily properties in 5 states. I own in Texas, Florida, Colorado, and Oklahoma.
That makes sense.
So these are some of the things that I look for. I look for population growth, or is there a net population growth to that market over the last 5 years? And is that population growth projected to continue over the next 5 years? Same with job growth. Are people moving there for jobs, or are the jobs going away in that area? So, just having one of those things, I look for all of them. If you have a market where, say, it's landlord friendly, but then you find a city where people are leaving instead of going, that might be a yellow flag.
Like there's areas of, say, California where you have to pay people as a landlord to get
cash for keys, right?
Yeah. You have to pay people to get out of your unit, even though they probably haven't paid rent for 6 to 12 months just to get rid of them. Sometimes you have to pay to get out. But Texas is not that way. What's in Texas, Mike?
It's like 30 days and their stuff's on the curb from the constable. So it's much different than Los Angeles.
I like the phrase, if you don't pay, you don't stay.
You don't pay, you don't stay. I've never owned in California, but I know people that own there, and they say it could take like 6 months, 9 months to get somebody out of a unit that doesn't pay.
Yeah, that's not friendly.
Yeah. So, we kind of wrap it up here. We've just kind of scratched the surface of what it takes to do a deal and raise money and locate them and close them and operate them. So, you mentioned multiple times here that you have a program that you train other people on how to become successful apartment owner and operators. Maybe tell a little bit about what's the best way someone wants to kind of reach out to you, learn a little bit more about your program. Do you have an event coming up? Maybe what's the best way to kind of get a hold of Brad Sumrok?
Yeah, so I do 3 weekend trainings a year. The next one coming up now is in July. It's July 16th and 17th. They're all in Dallas. I mean, I do speak at various locations across the country, but my weekend trainings are in Dallas. There are several reasons for that. One is it's centrally located. People could get in from the East Coast, the West Coast. There's a large concentration of properties that my students own in Dallas because I started here in Dallas. And so when you come to my weekend training, not only are you going to get classroom training, but you're going to get field training because I put you on a bus and we go on a half-day bus tour, and I could show you a multitude of properties that are owned by students that have purchased in Dallas. And as you know, Dallas is my residence. It has been since 2008. So, it's a 16-hour training event. Go to my website, which is simply bradsumrok.com, and that's BRADSUMROK. There's no C in my last name. And that's the best way to find out about me, my training. The name of my training event is actually Rat Race to Retirement, because my personal story is I was in the corporate rat race for 17 years, and I was able to retire in just 3 years after investing in apartments. So you can go to that website as well, which is ratrace2retirement.com. And that's the name of my weekend training event. And, I teach the whole event. This is not a multi-speaker event. I'm not going to tell you that, oh, yeah, come to my training event and you'll know everything you need to know about investing in apartments. No, the truth is I teach the whole thing for 16 hours and I run out of time. I mean, I've been doing this for 14 years and I'm going to talk about finding the deals. I'm going to talk about fixing the deals. I'm going to talk about funding the deals. So you're going to learn how to find them, how to fix them, how to fund them. You're going to meet 400 other apartment investors. So the networking is unparalleled. I don't know anywhere else in the country where you're going to meet, that many people. And out of those 400 people, about 70 to 80 will be students that come back that are already students in my program. So you're going to meet multifamily owners. Then I have members of my team where we talked about in the beginning of the show, you want to build a team. I'm going to have an attorney there that specializes in multifamily. I'm going to have an insurance company. I'm going to have a lender. Do you want to know who the lender is going to be? It's actually Old Capital, right, Paul?
That's the right answer.
So Old Capital will be there. So imagine coming to a weekend training event for $97, and that's all it costs, and you get lunch and coffee included, and you get to build your team. You get to meet potential people to invest with you in the future. You get 16 hours of education from someone that's been there and done that, and you get to go on a bus and look at properties. So you can go back to your neck of the woods, whether it's in Dallas or other cities in Texas or anywhere over the country, and take what you've learned and apply it in your hometown.
So I've known Brad. We've known each other, 6-7 years now. We've done many, many loans for Brad and Brad's students. And I think it's a worthwhile investment in money and time to come to the event. What was the day again in July?
July 16th and 17th. It's a Saturday and Sunday. So you could fly in Friday night, fly out very late Sunday or early Monday.
Yeah, I think it'd be a good investment time if you're interested in learning more about this. You have aspirations of owning large multifamily deals, of syndicating it. I can't think of a better use of your time to compress timelines. Brad and I have been fortunate enough to be both affiliated with the real estate guys here lately on their podcasts and go around, speak across the country together. And, he's a wealth of knowledge and he's a real deal. And I highly encourage you guys to attend the event. July what again?
July 16th and 17th.
There it is in Dallas, Texas. So, Paul, you got anything else to add here?
Nothing. Thank you very much, Brad. We appreciate your time, and we will see you on what date?
July 16th and 17th.
That's what I thought.
So what's your website
I think
again?
You're asking me that so that the listeners get the date, right?
That's it. What was your website again? What's the best way to find you again?
bradsumrok.com. BRADSUMROK.com.
Hey, Brad, really appreciate your time today. Thank you so much.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.